Hey, good morning, everybody. How you doing? Loving life, living large, large and in charge. Hot to go HOTTOGO. Thank you for being on my team. Thank you for being here. I appreciate you. I hope you had a nice weekend. Hey, let me remind you that trading's risky, not appropriate for everyone. Past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term and never risk money you cannot afford to lose. Hi. Hey, my name is Wade. What's your name? Do these sessions 7:30 a.m. Monday through Friday here at Forex.Today. Thank you for being a client of TradersWay. If you haven't opened an account yet, not even a demo, well, please visit TradersWay.com and do so today. A demo takes less than a minute. To open up your back office, get to see the system, check us out. Check out our execution speed, check out our spreads, check out our customer service. I think you'll be impressed, but most importantly, I'm here to earn your loyalty and respect, and that's how you show it. So please do that. These are strategy sessions. Feel free to ask questions. You are the boss, and I am a humble currency analyst. So what's going on? Well, we got a lot going on. I guess we should just run through the charts today. The only thing in the Commitment of Traders report that you've probably already read is that there's some more dollar bears or less dollar bulls. Cool. Okay. But you got to remember, the world went crazy when Trump got elected and overbid everything, and then now it's got to come back down to reality. Fed is talking a little too aggressive, so that's got to come down. And Europe has been the place to invest the last 6 months, I would guess, just because it's cheaper. So, right, it's crazy to be selling at such a low price. Well, what we do, since we're not crazy, is just pick our prices and realize, look, it's July. You don't have to trade it today if you don't want to. Wait for your price. Right? If someone has a gun to your head that you have to trade today, I know I work for a broker. I know I'm supposed to encourage you to trade more, but that's not what I do. I want you to be successful so that you trade forever, years and years and years and years. So I'd say, look, identify your levels of support and resistance. Make sure you know what your trade plan is before you pull a trigger. So what are we looking at here? Kiwi dog, right? Or sorry, Kiwi yen. Well, you could have swing traded it short at the open, or you could be buying it at support now, which could also end up being a swing. You could take that shot. At least you know what the trade plan is. You know where the support is. You know you could keep your stop close. You could buy it in here and hope it goes at least to the top of the range. Or, best case scenario, follow the swing trade. Right? Pretty simple, right? And if you don't like it, don't trade it. Volume and volatility should continue to be below average. Maybe not average this time of year, but average over the last, let's say, 21 weeks. Joseph's not comfortable buying it. I'm expecting a bearish outcome. Great. Right? Good. So, oops. So what you should do is identify the levels of support and resistance. In this case, you sound like a bear, so identify levels of resistance in which you may consider selling and wait for it. Now, you probably should already be short, however. On the open, you should have sold in here if you're a bear. And if you didn't, that means you were not trading at that time of day, and that's your call. Okay. So that's what a bear's do. But you see, like this is like hardcore support. A bull would be preparing the other way around. So using price action. That could be the rest of the day, let's say, if you're a bull. Yeah. And why is it that you didn't catch the move, Joe? Yeah, you need to quit your job. So, in the swing trading course, which many of you have taken, you know exactly what they need to be here, finger on the trigger, ready to go. You already know your bias, you know your buy zones and sell zones, and you're simply at the right place at the right time waiting for the price that you want. You know the entry zone, you know the target zone. You know your bias. You just don't know if you'll get your entry. But that's the beautiful thing about swing trading. If you do have a job, then you should be able to swing trade. Are you in Asia, Joe? Oh, man, Portugal. So that's 10 o'clock at night on a Sunday. All right, I don't know. I don't need to know what you do. Joe's an exotic dancer. Oh, did I say that out loud? Oh, sorry, I was just thinking it. Yeah. Okay, oil. So, oil. One of the things we talked about, I believe, on Friday was oil open trading. Guess what time oil opens it? That green candle there is just simply oil, U.S. oil, WTI, opening for trading. That's all it is. You know exactly when it's going to happen, 7:20. So you should be trading no later than 7, more like maybe 6 o'clock in the morning. You should be sitting down and you know, and I call this intent. You're sitting there with intent to trade oil. You know it's going to happen. You're waiting for a setup. Okay? And this is ridiculously straightforward. That's your M2. Europe failed to break it. So let's do, it's an M2 double bottom. Okay. And by the way, if you were swing trading this at the Sunday Open, that is something that attracts you. Because it's not that it's green, especially after all of this red, but it's at M2. And you're sitting there, I hope it opens up at M2. I hope I get M2, 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 M2. And also, boom, look, M2! So it's not much of a coincidence that, this bottoms up. But anyways, going into the open, that is very, very catchable if you're an energy trader. And I know a couple of you at least are seriously considering making oil the thing that you trade, that you become an energy expert. Which I like, because a couple of times a year at least you can fly yourself to Vienna and write it off in your taxes because you're doing research on OPEC. Hey man, if you can write it off in your taxes. Joe's like, taxes? I live in Portugal. Nobody pays taxes. Ah, taxes. Yeah. Taxes, what's that? Never heard of it. I need to go to Portugal soon, in my humble opinion. I'm not going to, but in my mind, Portugal is a very beautiful place with fabulous people, fabulous wine, and fabulous food, and fabulous weather. And I think, Portugal. We do have a lot of friends in Portugal, so if I went, it'd be a block party. Yeah, Joe's like, that's why nobody works unless it's 10 o'clock at night. The one time you should be trading Forex. You're like, no, I got to dance. But that's my passion. I just got to dance. The funny thing about Portugal is everyone speaks Brazilian. All right. So anyways, if you are a bear, you can roll this over the other way. If you're a bear on OPEC, and as you probably know, OPEC and Russia got together over the weekend. They're like, hey, you want to make any changes? And everybody looked around. No, not really. So who is it? Libya and Nigeria are going to just not be part of the pack, pump as much as they can. Joe. Remember one time many years ago, I was at a party and a Dutch guy was talking to a German guy. So I butt in. I might have had a couple of drinks. I'm like, hey, I've always thought the Dutch sound like a bunch of drunk Germans. And they both looked at me and turned away, both insulted. I'm like, what? What? Was that culturally insensitive? Both the Dutch guy and the German guy were insulted. I'm like, wow, that's like a split right there. That's a split spare. So, but Holland has the best pony parks. Everybody knows that. All right. So anyways, yeah, you could take the short if you wanted to be a bear. Okay. You might have actually got yourself in this in the European Open this way, which is reasonably acceptable, except you're throwing down a monthly on top of a weekly, and that's not really the plan. What does a negative figure, I'm not sure if I know what you're saying, because you can't have negative oil. You could have a decline, I think is what you're saying. Decline in oil inventories? since you're talking about something being released, it would be an inventory number. So there's, like in the United States, for example, if you go to Cushman, Oklahoma, they have giant oil storage facilities, right? And all they're measuring is like they put in a dipstick and say, well, how much oil do we have today? Well, let's do it in black, I guess I gotta go, even though oil's not actually black. All right, so we used to have this much oil, and now we have this much oil. So the negative number I believe you're talking about is, right, this gap. We used to have a certain amount of oil, so let's say at time 1. But now at time 2, we have a lower amount of oil, the decline being the difference. And if there's less oil and demand stays the same, prices should rise. Okay. Okay. So downward sloping to the right is the demand curve. Upward slope to right is the supply. This axis is dollars. This axis is quantity of oil. Supply declines from S1 to S2, shifting the supply curve to the right, which means, you know, we used to have quantity A, so we have to do Q1 now. Q1. It's now shifted to Q2. Okay? Can you see now we have less quantity than we used to? Demand hasn't changed at all, but price went from here, P1, and now price is over here to P2. So we have a new equilibrium point at a higher price and lower quantity. Dude, we just did economics right there. Boom! You got to give me a heads up next time. I'll get you prettier charts. So if inventory, if the quantity of oil in supply falls with demand not shifting, so demand is constant, then prices should rise by the shift in equilibrium, or right? You know what I'm talking about? What if at the same time there's an increase in demand for oil? Like Chinese GDP goes up. What happens then? Demand increases now to demand 2. Okay? So now here's quantity, right? But what we're actually looking at here is price goes up even further. Okay? No, because now this new equilibria, right? This new equilibrium is going to be here. The demand 2, supply 2, zippity doo dah. Whatever. I think we cover that in the fundamental course, don't we? The supply and demand of money, or the supply, open market operations and bond pricing. Yeah. And interest rates, yield. Yeah. All right. Yeah. Cool. You are the one, only you, beneath the moon and under the sun. Cool. I always like economics in the morning. Okay. Holy smokes, huh? Just a lot of things going on here, right? So I was pretty clear about this last week. And maybe you think I'm wrong. I'm not in my own mind. And I don't believe it's ego, because I don't think ego has anything to do with trading. What I'm trying to get at, I guess I'll use my fabulous drawing tool, is that this area right here is the predicted bottom of the month of July. Or as they say in Georgia, July! That is supposed to be the open, the bottom, which we knew on the first of the month. So like swing traders, we already know we're done. But that's the point, right? We're done. I think you should be out of this trade. I know it's falling, but if you had a trade plan, okay, and this is one of, I don't have many hard rules. Maybe the only rule I have in Forex is that you exit at S2 or R2 for the type of swing you have going. So if you did a monthly swing, you're supposed to get out here. You should have been out on Friday, happy as heck, and I don't know what the date is now, but you should be like on vacay. Right? Be hanging at the crib with Beyonce and Jay-Z. Because, you know, that's what you do. A little J and B. It's a nice turn. It's a nice little move. Yeah, Dre and Snoop and M. A little Long Beach, Detroit thing going on, or what? You're like, hey Dre, I got a new tune. Listen to this. Bling 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 bling. Oh, you already got that one? Oh, I got a whole repertoire. Let me do another one. Bling 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 bling. Bips bips bips. Yeah, I can do this all day, Dre. Yeah, I know my hip hop. It's like, Dr. Dre, do you really have snowmobiles? Really? All right. Been stuck in the lab with my pen and my pad. All right. So anyways, yeah, we're supposed to be at the end, bro. And it is the 24th. I mean, I guess we still have a lot of time. Doesn't matter. What we need is discipline. Pip hop. Pip hop, hooray! Oh, yeah. What we need is discipline. And some people, they assume it means to do what you're supposed to do no matter how hard. Some people are like to not do the things that you're not supposed to do. Well, I think one of the hardest things about discipline in trading is getting out of profitable trades. I think after some point, you start to realize what brings your worst losses, right? So you feel like the discipline is to just avoid those things that have brought you pain in the past. But getting out of a profitable trade, I think, requires even more discipline. So just be careful in here. Decide what your plan is. You know, are you swinging longer than that? See, you could have sold this back in May and still be short, which means you would have busted through these monthly pivots several times. But as long as you're convinced it's your long-term trade, like you want to be in this based on the calendar more than technical lines, or if you're in this trade purely on fundamentals and it's not a technical trade, fine. You can convince me of that. All you have to do is tell me. I don't care. But if you're a technical trader, this is a worrisome wart going on right here, because there's nothing that says get out except, you know, the whole discipline thing is you're kind of supposed to get out here. So I would at the very least pay very close attention, and if this falls apart now, like suddenly we're up here, you should probably take it, because the rules. Now remember, USD CAD is not following the rules. It doesn't have to follow. It can do anything it wants. But what about you? What are your rules? What are your assumptions? What's your analysis tell you? Well, my analysis tells me that somewhere around here, price should work its way back to the central. Now, not that it'll hit it. I mean, it could. There could be some dramatic news or something. But the process, like let's say even last week, I probably even said it last week. Okay, this is when we start looking for pullbacks, right? So whether the pullback happens here or here doesn't really matter. It's the same reasons. Whether it happens or not, again, is irrelevant because we don't know what the future is, right? So how do we try to understand what's happening and somehow have a reasonable guess for what might happen in the future? And that's what, you know, this analysis is. What does your analysis tell you based on the tools that you use? Well, if you throw down monthly pivots, then now your analysis says this is an area in which profit taking often takes place. And with that in mind, it's either a place for you to also take profit because others are taking profit, and technical analysis is a self-fulfilling prophecy, or you could even start going long if you wanted a counter trend trade. You know, well, that's your judgment call. But analysis is analysis, right? So James has been short this for months. Great. Well, that's, I mean, obviously awesome, right? But that would be a fundamental play, or maybe he's using annual pivots instead of monthly pivots. Fine, great. I mean, as long as that's the trade plan. But there should be more to your trade than hope. Like, I don't want to get out because I hope it might fall further. I don't like that language at all. I don't want to hear the might. I want to hear I see the increase in risk, and because of that, I'm going to watch it like a hawk on smaller time frames, right? And I'm going to try to let it run despite. And maybe you bring in your stop. Maybe your stop is right here now. Right? And then it makes a lower low and you'll move it again to here. And you just kind of let that go for a while. But I'll tell you what, it'll probably drop and come back anyway. So just make sure hope is not your strategy. That if you stay in it, you're managing the risk appropriately. It's your opportunity to truly manage. And that's what you want to do, isn't it? That's why you're here. To remove all hope from your trading, and it's just the facts, man. The facts is every pip lower is an increase in risk to your short positions. Okay? I'm actually surprised we're down this low. Right? So cool. Now, if you're watching CAD, you're going to have to trade oil, right? Or if you're trading CAD, you have to watch oil, I think is what I want to say in English. So this is a scalp zone, right? Oops. Let's do it this way. Right, this is a launch zone here. It's launch time. Keep deleting these. Come on. Okay. Well, what does it tell us? Well, if we get the 1, 2, 3, okay. If we get a 1, 2, 3 up on oil, we should have a continuation down on USD CAD. Okay. So this is a very, 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 very basic trading setup. Oops. Like that. This is your very basic 1, 2, 3. Okay. But on a swing low, which actually predicts way up here, in fact, is what price action is telling, or not price action, but pivots. So you got your 1, 2, 3, which is a technical reversal pattern, on top of a swing long. So that's what you'd be doing. Now, I don't think you're going to get there easily. Okay. I think at least something like this would be in play. Okay. I don't even think it'll be that easy, but whatever. Once again, it's just the analysis. I don't know what's going to happen. News could come out and drive this up. Great. But this is a 1, 2, 3 reversal pattern on top of the swing buy zone. Okay? And if that happens, I don't know if it will, but if it does, then USD Kitty Cat should go down. It doesn't have to, but it probably would. And that's just simply the analysis. And do you hear the language that I'm using? It's purposeful. If that happens, then this should go up, and if it does go up, then USD CAD may fall, but it doesn't have to, but is likely to. So therefore, you'd be over there trading, right? But what you don't want to do is like, this does this, so that has to do that, and you don't want to oversimplify in that sense. I want you to simplify by being open-minded or a little more flexible versus being rigid and mechanical. So if you're trading USD CAD down or CAD yen up, you should have your WTI going. Okay? You should be watching that. So for example, if you wanted to sell the USD CAD, even though it's, I think, an undesirable, I think it's overbought. The Canadian dollar, in that case, oversold as a pair. I think it's oversold, and at some point in the next couple of weeks, it'll probably head up, probably, but may not. Okay? But if oil's going up, that's why it's overbought. At least we understand. And that this pattern not only predicts an increase in oil price, but also an increase in Canadian dollar. So this gives me a little more confidence on that, meaning the USD CAD short idea. Okay? Okay, and that's called correlation. So if this goes up, this could, should, probably, and may fall. Remember our friend peso? This is a prime example. Do you remember talking about this X'd out zone? As it fell down, 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 down. And what is the X zone? The X zone is where people are probably, we don't know, but the X zone is where we assume profit taking would take place. That's, our assumption is that's where traders will begin to take profit. And now we're in that zone on that USD CAD. We don't see the profit taking yet, but it doesn't remove the fact that it's a place where traders probably should have taken profit. And they might start taking profit today, and all of a sudden, boom, 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 USD CAD goes up. We don't know, but because it's very likely, then as a risk manager or money manager, you need to recognize it and be doing your job. And there's no hope. Hope's for amateurs. When you're right, you make money. When you're wrong, you lose money. There's no hope. So anyways, look at that. So way back here, we look for a 1, 2, 3 with the target of the pivot cluster. And that's exactly where we are right now. Good job, everybody. Okay. Oh, and maybe we should say it one more time, just to make sure everyone else is here. What is that orange line? The sort of the only 72-hour period in the entire month that I would trade this pair, and I would only consider selling. Not because of what I see, but my rules of engagement. I have a 72-hour window, usually, right? In which I may short or not short. But that's it. Is that in the training course? I bet you it's not in the training course. At boot camp. I'm wondering, I think it needs to be put in there if it's not. So to go back, in case there's other newer people, all these vertical lines are in the 72-hour window in which I may or may not sell. Isn't that cool? There's no other trade on this pair that I could possibly do. That's the part I like about it. There's only that, look at that. There we go, kitty cat. Oh my God! Unbelievable. It's crazy, man. That is a move, man. I still think it's dangerous. But like I said, if it makes a lower low, move your stop from S2 to down here. So that's what I would have done. So you should be doing it now. If you want to lock in even more, you could try dropping it here. But I think what could happen is it'll drop down to support, come all the way back, knock you out, and then do whatever. So the more conservative place, if you're trying to stay in, would be above the resistance here. Because any breakout should have a retracement. Whoa. Oops. Didn't mean to do that. So I'll use a drawing tool then. Any breakout should have a retracement. Okay? So that's why you kind of want to keep, if you're trying to stay short, then you want to be above the entry, not the retracement. And then once it makes this low, it's going to come back and kick off here. So now we're just going through the price action course. By the way, I think it's on Wednesday, FX Street is going to send out a coupon code for the training courses for summer school if you want to do an August version. But I believe it's 60% off. And that's the last one, and then I'm going to delete it because it won't be summer anymore. Okay, just kind of looking around. What should we do? Okay, cool. It's pretty, excuse me, pretty unremarkable. If you want to be a bear, you're in an area you should consider being a bear. Okay? If we get above that, there's no reason to be a bear anymore. I mean, maybe up here, right? But even that doesn't smell very good. I think if you want it to fall, this is what you wanted. This is what you need. So I'll move this now. Okay. And you see a cluster? I see a cluster here. It's funny, I already got the target set. Oops. But yeah, this is, if I were me and if I were a bear, this is what I'd be looking for. You know what this tells me? That we're going to do this. Let's try it this way. Something like that first. It's up late. It's up dancing. Big Joe. You just gotta dance. So we did Kiwi, didn't we? I think so. Oh yeah, we got to do yen yen. Okay. Just waiting, man. It's tricky because there's no weekly swings. Okay. I mean, you have this like lower low, lower high kind of this thing, lower low, lower high. It's kind of hard to play here. There's a cluster. But it's not something I like. I don't like much here at all. I mean, it's clearly coming down. Okay, but this isn't a sell zone here, is it? So I don't know what moving averages work for you on this. I mean, this is what you have to start looking at. I mean, it's clearly falling. Are you trying to ride the 21 or ride the 5 or what? You can see like there's a 21 short, there's a 21 short. So what, on Tuesday or Wednesday? Maybe there's a 21 short? Or just ride the 5? You like rabbits? How do you like them rabbits? Look at that pivot cluster. OMG. I'm glad I did that. Holy smokes. Hey, look at that. Look at that. Monthly support, weekly support, psych level, just a tickle below 110. I think that'll be interesting. And I'll be gone tonight. Yeah, I'd keep my eye on that. That's a pretty big psych level, and USD yen loves big psych levels. Nothing in between. So we talked about this on a different pair, right? Check this out. Here's the target. Here's the inverse head and shoulders, and now we're back to the weekly central. This is like straight up textbook. Kind of like this one. Look at that, just straight up textbook stuff. Gold, R1 predicts the S1. Yeah, okay, so it was the, one day later we hit the S1. But oh yeah, Peter, yeah, if you want to get short on that, we can go back. I mean, all you have to do is adjust your aggressiveness, right? But see, I wouldn't sell simply because it's a 50%. But yeah, if you want to take it, and see, I look at it more like a price action trade than a 50%. But you know, it's all the same thing. But yeah, you throw one down there and you're in. Okay? But it doesn't change anything on the higher time frame. Okay? The higher time frame says the trend is strong, but the entries are mediocre. So an aggressive entry just allows you to maybe move your stop either here, or if you're really conservative, up here, right? So yeah, but see, that's easy if you look at the 4 hour and say, I want to get short. I want to be aggressive. I know we're riding a 5 on the 4 hour, right? I want to get short off the 8 on the hourly, or you're in your sell zone, or you want to kick it off. You're trying to stay short under the psych level of 111, whatever it is, right? That's the strategy part. You look at all of this and you say, I need to get short. Then you line everything up on the 15. You got the Stokes, you got the roll reversal, and yeah, you throw it down. But I wouldn't reverse engineer it that way. I wouldn't say, oh, look at this and then go justify it. Okay? So like I always say, you got to be a bear first and then adjust your aggressiveness to the market conditions you have. So because it's like New York Open, you have more permission to be aggressive than other times of the day. Okay? Also, having the lower low, then having an overbought Stokes is beautiful technical analysis. Yeah. Let's try to see if there's anything else I want to do. What's going on Wednesday? Is there a press conference? Well, a statement is not a press conference. Is there anybody in the office at the last week of July in Washington, D.C.? Washington, D.C. They're going to get together and like change policy and let all the interns handle it? It's what they call not a live meeting. Written on these charts are the currencies that I want to trade. Leave my trades open. They run profitable for days. She told me in the morning she don't feel the same about euro in her bones. Alright, anyways. Just got marking my support and resistance. Yeah, so yeah, Peter's shorting the USD yen. That's cool. It's just there hasn't been good swings. You could be short for minutes, hours, days, and weeks, but it still doesn't have to mean that there's a good swing. Just there isn't a swing, but it's definitely tradable because the trend is strong. So anyways, some yen. By the way, the Japanese yen's strong almost every year at this time. Right? That's not new information. We talk about it every year. Was it Kiwi yen? I think it was Kiwi yen we were doing something like, I think about 3 weeks ago we were on a tear. I think we were actually like, I guess I should use my drawing tool, it's easier. I think we were actually, I think we're here, right? After this giant, enormous move up. Didn't I say that you should not be surprised if by the 3rd week of August, you should not be surprised if we're all the way back down here? Did I say that? Or do I think it? So, hey man, I'm not predicting that it's going to happen, but don't be surprised if it happens. Yeah. And I know or I believe I say that because I say it every year. Right? You've only seen the show once or twice, but I've been doing this show for many a blue moon. And so, if that happens, between the 3rd week of August and the 3rd week of September, I'd probably be heading back the other way again. Okay? So it hasn't fallen, but we are talking about like the currency pair that moved up the most. But I think this is like right around when I got back from Harvard. It might have been the first thing I said is, hey, it's been a nice ride. Don't be surprised if it changes. And this, again, this being one of the strongest up pairs, well, it hasn't fallen, but it's definitely stopped going up, which is almost as valuable. So it's kind of hard to beat experience, huh? Okay. And at that same time, we topped out on this pair. But that shouldn't be remarkable either, right? You guys remember this? This was the target. This was the conservative target. This was the aggressive target. This is the, like, even a blind man can see it. entry. I think that was the one that Ryan took the double top on the smaller time frame. So there's two opportunities here. You're a buyer right now, or you're waiting to be a seller, more like this. Okay? Those are the two realities. Alternative universes. Yeah, well, there you go, Ryan. Ryan's the beast. The wizard. Ugh. Ryan, you should have one of those pipes that like hangs way down here. Right? I actually looked at some a couple of months ago. Hand carved pipes. You know, they're you can't quite see. They're about yay long, not right? They're long. Well, let's say you get a block of wood that's half a meter long, and you want to carve a pipe that's curved. How do you do it? It's curved and hollow. You know what I mean? You're like, oh, actually, you start thinking about it. You're like, wait, the grain of the wood would be straight. I got a curve. And if I do that, it would break under its own weight. All of a sudden, you're really thinking about it. You're like, actually, it's not that easy. Glue. Well, I'll tell you a story that I was impressed in. So I read about, I think it was out of Italy, actually, where they make pipes, right? And the way that it works is that, let's say you take on your son as your apprentice. So like this is the tradition, right? You make your son go out into the woods, and you find a particular type of tree with giant roots, you know, ancient old tree that's fallen over. You make them dig up the root system, which could take a month of just hardcore digging. Maybe more, actually. And finally, you get this giant thing out, right? And then you drag it out into an open field, into the sun, to dry. And then you go over to one that's already been drying, drag that one into the shop. And you start teaching your son how to carve a pipe. And you use the root system where it's most dense. It's almost like stone. It's such solid wood, right? And that's why the wood never burns. So you start carving out of this incredibly dense root system of this giant hardwood. Well, the most interesting thing is the root that you're carving is actually from the root system that the father dug out when he was a young boy becoming an apprentice, because it takes 30 years to dry it. I always thought that was really a fascinating tradition. Our world just does not have patience anymore to say, yeah, we need to wait 30 years for it to dry properly. I just thought that was a fascinating tradition. And of course, the master was an apprentice, and he had dug up a thing and left it out. and then he started carving his father's roots. Anyways, there's a lot of neat analogies in there. All right, so once again, if you're taking the swing trading course, there's 2 counter trend trade strategies that are outlined. One of them being this. Okay. The other one being this. How funny is that? Yeah, wait until you get 40 and 50-year mortgages, Mickey. Okay. Are you a bull or a bear? It's a 40 or 50-year mortgages. Can you imagine? You're helping some guy who's 40 years old, needs a mortgage for a house. Needs a 50-year mortgage so he can afford the house. I'm like, wait, that means he'll be paying mortgage into his 90s. It's not even expected to live to 90. And at paying normal interest rates, that means you're going to be paying like 400% over the life of that 50-year mortgage. Right? Because like 30-year mortgage, you're basically paying 100%. But on top of that, and then on top of that, because it's all about compound interest, it'd be exponentially more for another 10 years, 20 years, right? So anyways, this is a buy if you're a bull. If you're a bear, you're kind of waiting for something like this. Just make sure you know what you're doing, son. Oh, look at the time. Yeah, it's pretty late. I don't want to go anymore. Just it's pretty late because if I keep talking, it'll be another 20 minutes. So why don't we do this? Why don't we agree to meet here tomorrow, 7:30 in the morning, New York time, and we'll go through the charts, and I'll answer your questions. Do you agree? Yeah. So I hope to see you tomorrow. Please visit TradersWay.com and open an account. I'll see you tomorrow. Cheers.